Hello everybody, welcome back. Bit of a low turnout tonight, but I suppose that sort of is to be expected when the market looks like it does. Hang on a minute. Just charge my phone up, hang on. One of them days, half term, innit? So basically spend all my time now looking after everyone. Not just my own kids, but my mates. Because obviously I'm basically around, aren't it? So let's get stuck in then, because I'm absolutely knackered. I'll tell you what I'll do then. If nobody turns up, if it's just this handful here, which is fine, I'll open this up to the public. We'll give everybody a freebie, shall we? Obviously, you guys first come, first serve. I don't want to take value away from the Patreon, but be a bit of a stale night if it's just us guys. Right, so first off, let's have a look at Bitcoin, which is basically sort of pushing up against this 10 exponential, which is fine. That's the daily, again, pretty much the same as it's been forever. The bounce here is pretty good, but bounced into a death cross retest, which is part of this bigger one. So the big one here, bang, another one here, bang, 50 again, bang, 50 again, bang, 50, and then 50 just recently. Once you break that 50, the next target is the 200, which currently stands at around 98,200. I reckon at that point we'll have enough momentum to try to make its way up to 100,000, maybe 101, which is this horizontal. So it's all about breaking that. And look, I'm not suggesting we're all sitting around trying to trade these small things. I've done a few of these, mega longs, whatever. I had one on Litecoin today. As soon as I saw this rejection take place, I just took profit. When I say took profit, it's a 300% profit, but it's not. I'm not making millions or whatever. And I've been stopped out on the majority of those other massive ones I was doing. So I think even me now, I need to have a word with myself, put it down in a trading journal, because I'm getting so bored that I'm doing these mad things. And look, it's working out for the most part, but it is a symptom of how boring the market is. So I think I need to rein it in a little bit. But yeah, that's what we'll be looking for, a break from here to here. But until we see the break, expect a rejection, which is what, for the most part, the 50 exponential has been doing. And recognise it's the 10 exponential too. I mean, this is a downtrend. It doesn't matter which way you cut it. It's a downtrend. It's a classic downtrend. But there's criteria to break higher, and this is all it is. Here to here, and then to here, and then perhaps maybe we just reverse from there. The interesting thing is to look at the Dixie, actually. So the Dixie, we've sort of got that bounce that we were talking about now, coming from the weekly, which is also that horizontal as well, roughly around this area. So this is where you'd look to see a bigger bounce take place, maybe even a full reversal back up. This is what we'd be looking for if you were bullish on the Dixie. But if you reel it back in, you see a death cross retest, 50 exponential on the 4 hourly. So it's a carbon copy almost of what Bitcoin's doing. So Dixie going up, Dixie going down, Bitcoin going up, Bitcoin going down. It's and all markets the same. Look, it's an interesting thing to witness. Markets are, it's like that analogy I use where you throw like a stone into a still pond. It's going to take a while for those ripples to find their way to the outside, and then it goes still again and being like the way it was before. There's a lot happened, hasn't there? Really, there's a lot that's taken place, behind the charts, and the charts need to find some kind of balance. And at the moment, they don't really have it. They're kind of all just fluctuating in what would appear to be a bit more of a bearish trend. Because if you're gonna, if there's ripples on, you don't want to be. Going too crazy on it. If there's ripples in the pond, it's not the way it should be. You want to see a placid pond, if that's the right term. So anyway, enough of the analogies. All I'm saying is that all the markets are still in a little bit of shock, and they need to find some kind of balance before they can find their own feet. And at the moment, they haven't found their feet. Right, so we'll start with Alan Bell. Hi mate, your thoughts on Polkadot? Is it a sleeping giant? So Polkadot is like the better version of Atom, really. And in hindsight, what I probably should have done is done my sort of Atom situation on Polkadot. So it's the same, more or less the same staking rewards, but the chart is generally a bit better than Atoms, but they more or less are the same, more or less the same price, more or less the same chart. There's not too much difference between it. They're basically doing the same thing. When you look at this, you see this happen. So it came onto the market, bang, bang, just like Atom, and then horrendous pullback, bottoming out at $4.32, which is kind of, really not too far away from where we're at right now. You might be able to, and again, I don't know if this is something that we'll be able to enjoy this cycle. I just don't know if there's enough time or money in the market to allow for it. But you could consider a 100% accumulation range on Polkadot, which could end up being one of those huge big rallies once it breaks out. One similar to that of Chainlink, or we're not even going to say it's anything like it, but XRP for instance. But if we're thinking that the market's going to end around here, right, which is around September-ish of this year, so around this area, that's generally what we've got left, in my opinion. That's the line in the sand. That's where it's all going to finish. It's not got too much time left before we get there. And this chart has been born in a death cross on a weekly, which comes in at $11. So I don't really know what to expect between now and here. It seems a lot to ask that we can see something like this, although it is possible, happen. So with that said, it possibly is a sleeping giant. It's just unfortunate the whole crypto market is tied into this 4-year cycle that is almost guaranteed to play out again. To be fair, almost guaranteed. I mean, there is a chance that it might not. This time is different. It depends on how the ETFs play, if they decide to continue to hold or if they do actually start to sell. So we don't really know until we start to see the outflows. So yeah, that'll be an interesting thing to witness if it happens. But basically, a sleeping giant, if it had time, it certainly would be. Most coins, when in accumulation, they accumulate within a 100% range, which is this. That's what Polkadot has been in, 150, which is 50% in a crypto. Do you know what I mean? But 150% range, since May 2022. So a long period of sideways should result in a very, very explosive uptrend at some point. The question is, is it going to do it? If it's not going to do it, and if we're going to continue in this, and this does prove to be a sideways accumulation, where better to get your foot in the door is towards the bottom of the accumulation anyway. And whether you're doing it between now and here, you can stake it for 6 months or whatever, at roughly around 15%, isn't it really? You've got 217 days worth of that. You want to get out before that. I imagine the lockup period's like 21 days. So you could try that, and this would be the place to try it from. Based on what we see, we have a decent respect of this bottoming area, and we're close enough to it to consider it to be, an educated guess as to where a bottom may form. And look, when you zoom in closer, it's obviously not perfect. I just drew this in just now. So we're sitting at $4.80 something, and these wick lows could be another 26% down. No biggie. If you bounce from here towards the top, that's a 100% gain. If you get, I know this isn't crypto, gains or whatever. This isn't what you're in it for. You're in it for much bigger than this. But a sideways accumulation of, what at this point now would appear to be, 2.5 years, that's pretty considerable, So if only we had more time, you would expect a big breakout. I find it hard to imagine that it's capable, although we've seen it in the past, of breaking out and going to such significant highs. But why wouldn't it, I suppose? XRP did it. XRP was able to go 100%. 500%. We're only asking for double that. But yeah, from a trading perspective, sideways is good. The longer you go sideways, the more it favours the bulls. So, yeah, and we are predicting genuinely a rise towards the end of the year. So, sleeping giant is probably a bit of a bold statement, but uptrend, at some point this year from this area, even if it was just to bring you up to the $10 zone, it seems pretty likely. It's more likely that it does bust through a little bit, tries its way to the mid-20s, but sleeping giant might not be the right word. Right, if this is all we got, I'm gonna open this up to the masses. Yeah, I'm sure you won't mind. We'll do it all the same. If I can just find the place to do it. I'm not obviously the most capable of YouTubers. Right, there we go, the public. So we'll do this for the next hour then, for you, me, and everybody else. So there's your Polkadot. Anyway, hopefully that made some kind of sense to you, but this is a downtrend, however much you like it. But that is a support, this is a resistance, sideways is good, and if we are going to go bullish towards the end of this year, a breakout from here should take you, hopefully, to the lower to mid-20s. That's what I'd generally be looking for. If the cycle continues further, then yeah, it's going to have a much more explosive and longer lasting move. But I think this is where we should all start to limit positions, or at least be cautious, around September of this year. Right, would like to load up on more algo. Got some at 26. Okay, cool. Also, just check up on XRP and XLM. Right, so we'll start with the big boy first, because this is the place, this is the one that should dictate to all those other derivative versions of XRP. So start on the weekly, we see the resistance trend line on the RSI. Once you've got a breakout of this, you should be good to go for a new all-time high at that point. As far as support is concerned, it hit the horizontal perfectly, hit the 10 exponential perfectly. It's being traded on the higher term timeframes. That's good. So when a support gets like tagged on a weekly, for instance, is way better than a support that's tagged on a daily or 4 hourly, obviously an hourly or whatever. It means a lot more. It means that the price is likely to remain above this area, because the larger investors, the longer term projection is being used as the trading tool, not the shorter term. So it makes this area, this $2.50 we'll call it, I know it's a little lower than that, this $2.50 area, extremely robust at this point and very likely to continue up. So the next target is going to be $3 on this one, and that's where that's what it looks like it wants to do. We just need to get this breakout of momentum on a weekly, and then you'll probably see a lot more than that, because we've got lots of room to break out from here. I would be looking for this to move into the 4s and the 5s and then see where we go from there. So XRP is amazing on the weekly. It's the best thing out there, really. Better than Bitcoin, better than everything, really. It's the best one. And how happy are we? Should be pretty happy, because we are stocked up to the eyeballs, and we have been for the most part of this year. Never been afraid to say it, and now we can see it. So the daily, we're creeping above moving averages. Again, it's not with much conviction, not yet. We're still waiting for the green light on Bitcoin. I still believe that Bitcoin is likely to go up rather than down at this stage, so XRP is going to go up even more rather than down. Based on the 4 hourly, we're trying to get back above all moving averages as well. We've got a death cross on the simple and exponentials. We're above the exponentials right now. The simples are up here at 281. Once you're above 281, that $3, $4 perhaps is quite likely. It won't take much for it to do one of those mega pumps, especially at these higher levels, because we've maintained price above 250, which is unbelievable. So I kept on saying, say it to lots of people. I said it on the Telegram. I said, look, we shouldn't be depressed or sad or anything like that. If you're anything like me, you've got plenty of Bitcoin, you've probably got plenty of Ethereum. Yeah, it's about risk, isn't it, really? Balancing your portfolio. And then XRP, it takes up a considerable amount. It's the biggest hodl of all the altcoins that I have. And yeah, I mean, I'm speaking from my experience. Obviously, this downtrend that we're seeing in crypto, it's boring, but we should all be massively in profit since the beginning of this bull run. Even more so since since XRP basically decided to rally like a beast. So we shouldn't be depressed. We should be very excited, because we're holding on to, for the most part, the most bullish of coins here. So it hasn't retraced like it used to do. It's maintained significant highs from where it came from, which means that I'm pretty sure $5 is an easy target. And those targets that we were talking about like last year, where we were speculating that there's a reasonable target of $14 on XRP, I think that's also reasonably likely. It's not the most likely scenario, but it's possible. It's definitely possible. So XRP is looking all right on the weekly. Daily's okay. The 4 hours is neither here nor there, really. We've got criteria that we've got to meet back above 280, but other than that, generally okay. Right, what else was there? Oh yeah, so there was XLM, which is the the retarded brother of XRP, really. So you can see it's not as good. This is probably going to look like most altcoins are going to look tonight. So we're stuck on this sort of trying to creep above a Bollinger Band center. Death Cross retest at 36, another one here at 37 towards 38. So the 4 area looks pretty crap, but not different to anything else that we see. The daily, again, struggling with the Bollinger Band center. So you got a 10, a 20, and a 21 exponential. They're all big resistances, and then obviously the 50 here. There's no death cross, so it's not the worst thing you've ever seen. There's so many altcoins out there that look horrible on the daily, like absolutely disgusting, just terrible charts. And on the daily, this isn't one of them. So this offers you, if we do pull back, this offers you more opportunity at 28. So it's done all right. It's moving off the back of XRP, obviously, but if you were to look at this on its own, you'd be like, all right, I'll tell you what, I wasn't in here, I was not in here, nor here, or here. Okay, what I'll do is I'll wait. I'm happy to wait. If it does come down further, 28 cents or just above is where I'd go for it, around that 28-cent zone. If we don't get it and we break out, then fine, you've missed it. But I know that you've been talking about this for a long time, so I expect that you are probably in it. Based on the weekly, though, if there's ever a place to get on anything on the weekly, anything at all, a stock, a commodity, a forex chart, anything, obviously a crypto of significance that looks good on a daily like this, then we're talking the center of the Bollinger Band as well. It's the 20 weekly or the 21 exponential on the weekly. That's where we're bouncing from now. We've been bouncing from that. This is the 3rd week in a row. So if you're going to get a full reversal based on a weekly, it starts from here. But because it's a weekly, it might take many weeks. But this is it's all about stats, isn't it? 65% of the time, you will bounce from this area and maintain this as the low and then go on to make a new high. If you're below it, which is what a lot of other altcoins are doing, then 65% more likely to get rejected when you move up into it. So the odds are in favour to the tune of 65%. So it's not great odds, but it's better odds. It's the best odds that you're going to get based on this current setup, and that's where it is. So it should move up to a new all-time high. But not tonight. Not tonight. Right, Algorand, not quite the same. Algorand, unfortunately, showing its true colours, which is rubbish. We are now below the 20 and the 21. So again, massive resistance at 29 towards 30 cents. Massive resistance there. No turning around going on over here on this weekly. This weekly is slowly bleeding out. I wouldn't say this 50 exponential holds any relevance at all on this weekly, so we're going to have to bring it down a bit. And look, what I would say about Algo is that, so Algo will likely move with XRP and XLM. They'll all move together, and it might even outperform those because it's basically nobody wants it. The order books will be thin. It's just an imbalance. The order books creates larger greener candles. That's all we're talking about. But based on its own merit, it's weak. And the problem with it being weak is that if the market decides to nudge down a little bit, so Bitcoin loses a couple of grand, then this will come down quite a lot because it's not sitting at major supports on weeklies. The daily still has a little support here at 23 towards 24 cents. But other than that, what can we say? It's just a derivative of XRP, really. It's how to interpret it. If you want to buy more, then the next support would be like 23.79 cents. It's the 200 simple moving average on the daily. We had a response from it here. It wasn't perfect. We might get another one around here. If it's going to happen, it's not going to be perfect. But the one thing to note is that the money flow index has significant bullish divergence, significant. So if we are going to come down again, we're going to continue with that divergence, and it's likely to be pretty savage if we do explode from here. I have sort of probably overinflated expectations of Algorand because I'm a big holder of it, but I'd like to see it recover with XRP and get to areas that it can sustain. Unfortunately, it hasn't been able to sustain much. You've got to get above this big boy over here, this 54, 55 cent zone. Once you've done that, it shouldn't be too hard to make its way up to the $1.80, which is probably, based on time, like what we were saying with Polkadot, because let's just draw these lines in, based on time, this might be as much as we're going to get with Algorand this time round. But maybe I'm being pessimistic. Maybe I'm being too optimistic. It's hard to imagine what a big tear-up move could look like when you see something like this. But this, is a series of lows, highs, higher lows, higher highs, higher lows. So higher highs might bring us here. They might take us beyond. But it's the weaker of the three which is unfortunate. Right, hi CC, hope you're well. Just a thought on ETC, seeing similarities from December 2020 pump on a few charts, but we'll stick with Ethereum Classic. Alright, that's cool. ETC. There is a lot of similarities between the two cycles, I have to say. I know people say that there's not, but I really think that there is. Not just with this chart, but just generally anyway. I don't know how long most of you, I know you've been around, since Genesis when it comes to crypto, but I think a lot of people haven't been around the entire previous whole cycle. A lot of people got attracted in 2021, but they weren't here through 19, 20, which was basically sideways as well, just like what we're seeing now. And actually, altcoins got completely thrashed in 2020. So they had their first initial run, and then they all consolidated massively, and then they went parabolic to the max in 2021. But people will often forget what it looked like at the end of 2020. It might be something if you haven't been around that long, you just have a look at any crypto really that was around, that has that type of chart that was around, in 2019 and beyond. So you can have a look at how it performed, and this would be it. This is how they all performed. So 2019. So we had our first initial run when the bull market started. We consolidated for a long period of time. We've done that, didn't we? Last summer, similar. We had another run into the March crash. Couldn't predict that. Let's just zoom this up a bit. And basically sideways and choppy, to the point where at the end of 2021 we were getting close to, if not at, previous lows that we hadn't seen since the beginning of the actual bull market. So anyone who bought Ethereum Classic would have been up and down and up and down, up and down before they actually went up. Sound familiar? It does, doesn't it? So I mean, that's kind of what we're doing now. So when people say, "Oh, this cycle's crap because Bitcoin's the only thing that's been gaining," that's what happened last time. This is exactly what happened last time. Bitcoin rallied up from 3,500 to 12, or was it 14 or whatever? Came down to 6, higher low. Went up to 12, okay, then crashed with March crash. Fine, that's a black swan, a significant one of that, once in a lifetime kind of crash, and then went back up to 12, and then went to 40. And altcoins like Ethereum Classic and all his best friends stayed more or less at the 2019 lows, really, or thereabouts. Sound familiar, doesn't it? So everyone, I see it on Twitter, people talking about it. Oh, the cycle's so frustrating. I'm like, yeah, it is. It's very much like the last one. The question is it going to end like the last one and the one before? I don't know. There was a hell of a lot of despair at the end of 2020. We're talking November, December 2020. A lot of despair. They more or less marked the absolute low, and then it went absolutely bonkers. I am feeling that right now. I think it kind of does feel similar. We might be getting ready for a 4 to 6 months of parabolic movement. Although the evidence isn't really there. Right, so as far as the weekly is concerned, this one's below all moving averages on the weekly, all of them. However, there is no death cross. The wick came in, not the absolute low, but close to it. That being 18, we're at 21 at the moment. Okay, fine, we're 5% up right now. Okay, that's fine. Bitcoin's also moving up a little bit, which is fine. Major resistance here, fine. Death cross over here, which should be a dead cat bounce kind of area. If we rally, that's the most obvious place for a significant rejection. If you break through that and start to build a base above that, as we tried to build a base here between the 200 and the 200 simple, bang, 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 bang. What we want to see is this basically being a bit of a bear trap, really, with the false impression that we're going to continue to go down. But until we see the bear trap kick in, that would be the main resistance, from 24.45. As far as similarities are concerned, I mean, you said it. It is very similar, but I believe most altcoins to be similar. I think the reason this one looks so similar is because this one is one of the older charts that goes back that you can track. You can track it. Bear market, bull market, mountain, molehill, mountain. So where's the beginning of the bull market this time round? Around here. Okay, bang, bang, bang. Very similar. It's just moving with the market, moving with, like an altcoin, doing exactly what you'd expect it to do. So yeah, hopefully we'll get something like this. Now, I'm not convinced that coins are going to reach their previous highs. Not all coins will. I just think that there's so many altcoins out there. Everyone's moving into complete terrible shit coins that it's just diluted the retailers. Retailers are trying to go, obviously, like they're always trying to do, go for the fast buck, go for the next best thing. The Trump coin, the JD Vance coin, or whatever coin is come out next is just complete degenerate trading, and it's diluted money. The money goes from their pocket into the pocket of the dev and leaves the market. It doesn't come back in. It's just gone. It's just pulled out. Whereas at least before, well, there was always shit coins around, but at least before there was some kind of circulation taking place. Money coming from here, going back into Bitcoin, go back into altcoins, back into Bitcoin, back, which is why the dominance chart, I feel like, had more relevance last time, because it was an appropriate way to try and trade quite a small market back then. Way smaller than it is right now. It's pretty big right now, quite small back then. And so, yeah, it was appropriate to use that dominance chart as a trading tool. I haven't really found it to be particularly helpful at all this time around, and I think that's one of the main reasons why. But yeah, there is similarities to it. I view it just like I view the overall market, which is, all right, we're sideways, we're in despair, just like what people saw towards the back end of 2020. And if you need a rain check, just go to any chart that was old enough for you to do it, that was around, let's just call it from the beginning of 2019 and beyond, and have a look about how it performed. There's a very good chance it'd be an anomaly if it wasn't. The price at 2020 for that altcoin was similar to the price it was in 2019, which would have been pretty it was pretty bad. It's pretty bad. But that's the way it goes, and then just bang, straight up. It's just the nature of it. It's just the nature of it, really. I always tell the story about how when I bought like a relative chunk. It's a small change now, but like I bought like 36 Ethereum, which at the time was like $5,000 or something like that. When Ethereum was at $160, and it basically stayed at $160 for like 2.5 years. All right, so it's frustrating. I was like, oh, I'm up, or I'm down, or I'm up, or I'm down. It was a hodl for the whole time anyway, and I actually still have those 36 Ethereums, right? So fine, it's done all right. But for that, the vast majority of that cycle, it basically went up and down and up and down. I was in profit, and at some points I was at a loss. It was unchanged until the end of the cycle, where it exploded, and that's fine. Anyway, let's have a look at a few more of these then, shall we? So can we have a look at YFI? I haven't seen that in a long time. I dread to think what this looks like now. Back in the olden days, YFI 2 was all the rage on my channel. We were loving that. I think it's been delisted now. It probably lives on Probit now, rotting away. So I was told at one point in my life that this was, again, this is why you should never trust a YouTuber with your money. I remember watching some bloke, someone had sent me it, saying, everybody talks about how Bitcoin is going to make it to 100,000, but nobody talks about how YFI will make it to 1 million. Well, look at it now. From what I understand was there 40,000 of these, right? So the tokenomics, unless it's changed, there's 40,000. So a very scarce supply. I might be wrong. A very scarce supply hasn't benefited it in the slightest. It looks terrible. Like thinking about where it came from, which at its peak was like 90 something thousand. It's unchanged, isn't it? So again, it's not too different to looking at what is it that we just looked at? Ethereum Classic. We're back down to our bear market lows, more or less, give or take, 20% or whatever. We're up and we're down, we're up and we're down, and we're up and we're down. We're all over the place, but, based on this daily, it's just like all the others. We're below all moving averages, continue to move down. We do have some bullish divergence brewing on it, though, but we also have a death cross. So if you get a dead cat bounce, we're talking $7,000. I also remember, this is how funny retail is as well. Like, not you guys, the other guys. I remember making a video on either this or YFI 2 or something. They were trading at quite large numbers. And I said, this trade might give you a 50% move or something like that. It wasn't mind-blowing move or whatever, but it was just a trading setup. And I remember somebody in the comments going, we don't want to know about the coins that are already worth thousands. We want to know about the micro caps that are worth fractions of a cent. And I was like, hang on a minute, we're talking percents. It's irrelevant. The price is irrelevant. What is relevant is the percentage up or down that gives you the risk over the reward. So don't worry about it being worth $5,000 or 0.5 of a cent. It means nothing. That's for the people who want to wind back the clock, get Bitcoin at a cent, and then sit on it for 10 years. That's what they're thinking. They're not thinking about profit or risk reward, or they're not thinking anything like that. But I remember thinking, what an amazing thing to say, completely missing the point of what it is that we're trying to do with these charts. We're not looking at actual money price, we're looking at price appreciation. That's all we're thinking about. We're thinking in terms of percents, not actual cents. Right, anyway, we'll move on from that. So this daily looks pretty awful, like all the others. Just like all the others, we're expecting, if anything, at best, a death cross retest, where you'd look for a rejection. And if you don't get a rejection, then brilliant, the party's on. But I don't think it'll be led by YFI. If it's going to be led by anybody, it's going to be led by Ethereum, which at the moment looks pretty crap. Right. Hi, go and check CRV. Let's do that then, CRV. Hey, well, at least we've got some more people in. The market is so boring right now that effectively all you really need to think about is, do you have a bias on the market? And if your bias is one of an uptrend that should end, in my opinion, around September, then I suppose indiscriminate buying across the board for all the piles of shit that you like, it's up to you if you want to do that. My view is to always buy into strength and to look for charts which are holding price and actually have kind of strength built into the chart. Lots of altcoins don't, but that doesn't mean that they're not going to rally through association with the market. It just means that they're extremely vulnerable to further pullbacks. This one's on thin ice, losing all moving averages just recently, the 200, which is all part of a golden cross retest. There's your golden cross, and the retest has been pretty messy. So it's vulnerable to the market, definitely at this stage now, because we've got all these areas to make up for, but we don't have any death crosses on this daily, which is good. So I wouldn't call this a strong chart, but it hasn't expressed extreme weakness, not yet at least anyway. And I think the market will turn around sooner rather than later, which means that this is in a much better place to actually just continue on. Now we can extend this, which would be another main area of resistance, probably more resistance than anything above us at the moment. This is the biggest resistance right now here. That 20 moving average is around 55 cents, but beyond that, the big one is going to be around 90 cents. We do have some nice bullish divergence brewing on the money flow index and on the RSI there, so that's something to hold on to. Sideways to the max here, so that the 4 hour is neither here nor there. It's basically up and down, not giving really any edge when you have the moving averages crossing up and down just with the price action. So the 4 hour is not giving anything away, but given that daily, I imagine the weekly looks quite good. Oh, I was wrong. Okay, so the weekly doesn't look that good at all, actually. You need to get back above 62 cents, really, to give any kind of major bias on a long-term position. And there's a death cross retest, actually, on the weekly. So similar to Polkadot, similar to Atom. A lot of them are quite similar with this. So these golden cross, these death crosses were born because this came into the market in the bull market, and basically spent the vast majority of its life in a bear market. However, let's not write it off. The daily's still okay. The weekly will be much better if you can get above 65 cents. Right, what else have we got then? Crow, Atom, Algo. So we've done Algo, so let's have a look at Crow. Let's have a look at that. Crow had a good setup, but the rest of the market denied it. Oh dear me. So we really have come crashing down to lows that I wasn't really anticipating. But that's fine. That's fine. Like I say, I like it when it's down here because I've got the Crow card, haven't I? So every time I go buy a can of baked beans from Aldi, I get some cash back on it, don't I? And I get to stack that Crow with every baked bean that I buy. So let's have a think about what it is that we're looking at once we've taken that off. There is a diagonal support trend line. Yeah, and, we might be putting a bit too much weight on this. It really isn't that impressive, but it does exist. So excuse me, 1, 2, 3, 4. So we're talking supports should hold. It shouldn't go any lower. Let's hope it won't go any lower than 7.78 of a cent. So that's quite close to where we are at right now. You know, we're not too far away from that, and the expectation would be with every higher low, you should then move into a higher high. So if that is the case, the next higher high should be above the 20s. And if we've got anything to go by previously, this can be a pretty explosive chart. I like Crow for one simple reason. I like Crypto.com. I don't trade on them or anything like that. I find their slippage pretty shit, actually. You know, it's not a great place to trade. It's the lower end of the basic retailing investment platforms, I have to say. So it's just the Crow card that brought me there. But one thing I like about them is that they promote almost exclusively on, you know, stuff like Bloomberg or events. You don't generally have any of these snotty influencers like myself, you know, trying to push Crypto.com. You know, they're trying to advertise to the more savvy of the retailers, you know, the middle class of the retailers, you know, the ones that will respond to genuine advertisement, you know. And throughout the whole bear market and this previous bull market, and this bull market, if you want to call it that, you know, they're every day, day after day, day after day, minute after minute, advertising permanently on Bloomberg. Not that means much to anybody, but that's quite a lot of adverts going out to quite a lot of people that are solely interested in investing. So I like them for that reason. So we're looking for it to hopefully turn around at roughly around this support, if we haven't already hit these lows already. Recognize these are a series of higher lows and higher highs. Even though the retracements have been significant, the turnaround should also be significant. So that's what I think of Crow, at least, anyway. We're only going to do one per person, I think, Steve. We've done that one. Let's have a look at SHIB. Oh, terrible trading. Terrible streaming connection there. Let's have a look at SHIB then. SHIB actually has a very similar setup to that. Let's see if it's still holding. It is more or less still holding. So we've got this giant ascending triangle where we are looking for it to turn around with every time it hits that support. Now, what we're doing at the moment, you're bouncing from the support. It's very weak at the moment, but it's still holding on, right? Still holding on. It is a series of higher lows only. But ascending triangles are more bullish than descending triangles, you know, and the reason for that is that with every support that it gets tagged, you know, a week later it's higher and higher and higher, whereas the resistance remains the same. So this is why it's considered more bullish, because you could enter into it and, you know, even if it doesn't rally immediately, the expectation is that the support holds from a higher level, from a lower level that you bought it from. So the support you bought will be at a lower level as the next support when it hits, and that's been the case here, here, and here, and here. So you're looking for this one to turn around. The first major target is 3191, you know, basically. And then the one after that, yeah, we've got this little area to take out, but I think it's more likely that we see a much bigger move up to 65, you know, up to there. And obviously at that point, you know, you'd expect a big pullback. But if you didn't, and again, if this happens, you know, relatively fast between now and September, then you might be looking for new all-time highs. It depends on how the rest of the market feels. I like this one. You know, I do prefer SHIB to all the other shit coins out there. It's the only meme coin that I hold a fair amount of, right? So yeah, SHIB's quite good. At least there's a fix on it, should we say? There's an area on that chart. There's a fix on it that we like, and that's all trading is, right? Hello, thanks for the freebie. Bonk is hurting now. Yes, it is. I don't think we'll even bother looking at that because I know that it's a steaming turd. Right, so let's have a look at VET then, shall we? VET. Okay, right, so VET, let's have a look at VET. So VET is hitting this major support, 3.2 cents really, it's roughly around this area. Yeah, this is the first area that I bought while waiting for the accumulation throughout the summer. So bang, bang, and I didn't actually get the all-time low. Who would? My next target would have been the significant low in the 1.5s and whatever. It never got there. So it did pretty well. We're back down here again. Again, sometimes you just got to turn off the noise and recognize what it is that you're looking at. Low, high, higher low, higher high, higher low. Where better place for it to bounce from, which would be here. you know, serious area. We saw such a significant breakout from there. Now we've come down to it. So the 3 cent rough area should be good enough for anyone to at least think about dollar cost average, starting a dollar cost average from there. If you go to a weekly, you can see that this area is also backed up by a golden cross on a weekly. So we had a golden cross on a weekly before. I should mention this. So there's your 200 and there's your 50. The golden cross took place here. Again, backing up that 3 cent zone, which is why I thought I'd give it a shot. Didn't work. So they're not indestructible. They are vulnerable to the larger market, being Bitcoin, Dixie, stocks, whatever. Vulnerable to the rest of the market. This chart cannot be traded in a vacuum. But if it was to be traded in a vacuum, this is one of the more appropriate places for it to actually reverse from on the weekly, which should mean higher high. So back up to 7, probably into the 8s, 9s, maybe even the teens, which would be my sort of top target. I'm not looking for this to do a full reversal. You know, until we see some power and significance and any kind of weakness on any kind of uptrend, which we don't have yet, we can't really say where the peak would be. But if we go for another higher high, probably looking, yeah, I don't know, it's too hard to say until we actually see it, but serious resistance is around the 12.5 cent zone. Right, what else should we go? So we've done that. Can we look at Toshi? Never heard of it, or I don't think I've heard of it. Is this going to be a real steaming turd, is this? Okay, right. So it's not very old, so just to put it out to you there, if you're not used to me talking about coins. If a chart isn't very old, it's not very reliable. All indicators require a combination of price, volume and time, you know, some merge of two or all of them really. And we've got price, we've got volume, we just don't really have any time. But from what we've got, the 10 exponential on this weekly does seem to hold, and if we do come down into it again, that gives you a price of 5505. Let's have a look at the daily. It probably looks pretty poor. So again, yeah, it's so young, it's not even got a 200 exponential on it at the moment. So what we've got is a 50 exponential, which seems to have held there. We're coming back down to it again, which is 6.3. We've got resistance here of the Bollinger Band center. Since when we lost that, we got rejected once, and then a big one over here, and the resistance is 779. So it's a rock and a hard place. But if you want to think about what it is that you're looking at there, it's effectively a symmetrical triangle, which is a 50-50 formation really. It doesn't know which way it wants to go until it does it, and so you're looking for a breakout trade one way or another. If you get towards the end of the apex, normally whichever move it does first is a fake out. So if we do get to the end of the apex and we break down, when it finally gets picked up, which if you have to trade, if you're going to have to try and trade this from anywhere, it's going to be from these sort of areas where there was a high and then the breakout. You're talking all the way down to like 4.5. So you might see this, and again, this is if we were to have a fake out, to have a fake breakdown basically. Apex, 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 breakdown, turn around, up. Obviously the opposite would be likely, you know, if we broke out here, back down and then up. So up is probably most likely, but from which area? When you're in one of those symmetrical triangles, I've been caught out badly. Enough for me to not bother doing it anymore. Trying to trade within a formation like that, it's just boring. It's crap. You're better off trying to do the breakout trade than anything else really. You just wait for it to resolve. Think about it like this: an opportunity will exist on that, but not right now. Right now, there's a fix. You can formulate a plan, but don't try and trade within the formation. I don't really see the point. It'll be a small trade, if anything, and an underwhelming trade, and you carry a lot of risk because you don't know which way it's going to go. Can we have a look at EOS? Your videos aren't complete without an EOS analysis. Yeah. EOS was looking quite good compared to the other charts, and I say quite good, better than most. The last time we did a stream, actually, I highlighted it as something that might end up being quite good. Since that stream, it's fucked up again. So it's back down below most moving averages of significance. We might be bouncing from here again. When you're looking at the simple Bollinger Band, which is this, the center of it being this pink the moving average here, we are above it. And so when you're above it, you move up to the next resistance. So you go from 62.5 to 63.16%. Okay, fine. That's really a pretty crap looking trade there. A full extension would be a death cross retest towards 70 cents. And then rejection from there. I wouldn't be buying EOS myself. You know, I'm not going to be buying that. But I did do some epic futures trades on it after the last stream, which were doing really well, and then they got stopped out, obviously. The incoming death cross on the daily here as well, which will be at 70. So if we do get a move, 70 is a big resistance on the 4-hourly end on the daily. So if you do move into 70, don't get too excited. You're most likely going to get rejected from there. If you break above it and get support on it, then that's where we're looking to turn around. And most charts look the same. Right, hi CC, can I have a look at SNX? We'll have a look at SNX then. I'm only doing one per person. SNX. So this is terrible looking chart here. I mean, I say terrible. Most altcoins will look similar to this. So take it from a weekly to start with. So this is what I would consider to be a down-only chart, really. It's unfortunate that this came in, 2020 into 2021. So it had this big, massive, mad move, full of emotion, full of FOMO, and it's basically shat its pants, basically. It's come back down to lower than the bear market lows. So that's not a good look for it, unfortunately. If you do have any kind of rally on this one, and again, between now and the end of this cycle, you'll be looking for these death crosses to get retested, giving you like maybe a 400% move. Only when you get above those can you consider anything special. When something's a down-only chart, you have to respect that and go, right, it's a down-only chart. Why will it ever reverse from this permanent trend of going down? Unless you've got a good reason, it has to be a very good reason. You should just expect it to continue to go down. So just like all the other charts getting rejected after the death cross and the center of the Bollinger Band didn't even have the power to move into a 50 like some of these others, or especially the 200. So have a look at the 4 hours to see if there's anything going on here. So yeah, all the 50. Most altcoins look like this, to be fair. And recently got a short signal on the itchy cloud as well. Yeah, the short signals in play. So it's down only really. So I'd leave that one alone. Check out Doge BTC. All right, let's do that. I bought Doge BTC at 15 sats, which was the sort of magical number, and sold it at 90 sats, thinking that I was a genius. At the time, that was a big trade. But looking at it now, it's one of those things where you just have to forget. You should never. This is always something you should always remember, right? We can always look back at how we could have been a perfect trader, right? I talk about this all the time with all kinds of coins, You do a 2 or 3 or 400% move, and that's a good trade. If you left it for another year, it could have been, 10,000%. You didn't know. I didn't know. Don't let that take away from the 400% that you made. But anyway, yeah, I could have been living the dream, the Doge dream. So that's not a good looking chart, I have to say. It's lost all moving averages on the dailies. It's not a good look for it there on the dailies. Check the weekly. And the weekly is telling us, Golden Cross retest on the weekly. If you're going to have a full reversal on a weekly, this could happen. Could, being the operative word, happen from here. It might be worth a punt, to be fair. But if it fails, it'll fail and you'll just have to suck it up. But based on the weekly, a reversal from here is reasonably likely. Most of the time a Golden Cross retest has a very good resolution to it. And if that would be the case, you'd be looking for a V-shaped recovery to where we came from. So, close to, what is that, an 80% move or something like that? Oh, my maths is getting pretty good there. 79.62% move. So if that were to happen, you'd be pretty happy with that, or you should be. That's what this setup does suggest. Doesn't mean it's definitely going to happen. There's no divergence on this. We do need the rest of the market to behave itself for it to be able to do that also. But, based on what we see, if it was traded in a vacuum, you'd be looking at that and go, alright, fine. Fart Boy is showing strength right now. Well, I've already done your EOS question. I'm not looking at something called Fart Boy. I struggle in knowing how to spot bottoms. Don't we all? And let me tell you now, nobody can spot an absolute bottom, otherwise they'd sell that knowledge, from way more than they could trade it, right? So no one can spot a bottom. Bullish divergence, buy high volume on oversold wicks, extreme price swings are my tells. What key factors for you in spotting bottoms? So the best way to spot an absolute bottom on a heavily traded chart like Bitcoin, for instance, can't be applied at this period of the market because we haven't consolidated anywhere near long enough to spot an absolute bottom. So this, if anything, is just a little stumbling block where I think, you know, we could turn around quite quickly, if not already, you know. But you look for something like a weekly is a really good way to think about it. So weekly, you have one really, really good, valuable tool, just a simple Bollinger Band, which is all based around the 20 moving average. And, you know, statistically, you're more likely to bounce from there than you are to break down from there. And that gives you a price here of roughly around 90,000. But if you're really looking for a bottom, and I mean really looking for a bottom in a bear market or something like that, or a long drawn out consolidation, you look for a single drive of bullish divergence on the weekly, marking a serious low. So we can backtest this quite a lot actually. So let's go back. So this is your bear market 2018. You're looking for a bullish divergence on the money flow index, which is your green moving average around here really. So you've got a low here, and you do have an ever so slightly higher low over here. You've got a similar kind of read on this one over here as well. So there's your bull market, your bear market lows coming from this big consolidation. There's a serious low, a pretty serious one, marking up here. There's your crash, marking the absolute low over there as well. Again, these things are clear in hindsight, but also look at where we're getting support on. 200 exponential, 200 simple, 200 exponential, 200 simple, divergence, divergence. This also works with spotting tops as well, obviously. So you've got overheated money flow index reads, which is one thing, but then you've got a serious divergence as well, which is printing another thing. So the divergence there, marking the peak. So we saw that again recently over here, didn't we? Which is why we were saying that, you know, thinking about getting out when we saw it. Let's just zoom out here. So there's your overheated read, and there's your divergence there. That's why we thought we were going to consolidate through all of last summer, because we had something similar. Recently, we didn't really get that. We were getting worried that we would, so we got a high, but we also got a lower high, but we didn't get a higher high when it comes to candle body. So I don't think this is a top. I don't think it's a top at all. And if we're going to find a bottom on this one, you're not going to do it with the same kind of analysis. So absolute tops, absolute bottoms for bull markets and bear markets, I find, should be easy enough to spot. If you're talking about short term, you are looking for divergences, like you say. You're also looking for resistances to flip to supports, all the simple stuff really. And one thing to recognize is that actually, as long as we're in these full-on bull market golden crosses, which are still uptrending, these are serious supports that offer nothing more than a V-shaped recovery. So yeah, it's just a matter of fighting battling the supports, whether it's moving averages on higher term time frames like a weekly 20 or the daily 200s. But yeah, I'm not looking for an absolute peak on this one yet. I'm also not looking for a new low to form, not yet. But no one can tell you the absolute top or the bottom. It just can't do it. It's just not possible. So it should be a good time for a grid bot. Well, yes, I suppose. Might as well. You could do a very tight ranged grid bot on some of these sideways accumulations. You could do that. I made a load of money, didn't I? If you remember on the last cycle, using the Bitsgap bots for Binance, trading BNB in this sideways 2020 period, I was getting between 2 and 3 BNBs a day when they were only worth about between $30 and $45. Look at them now, flying high. I still have a good half of those as well that I had. I made I turned $1,000 into 50 grand in like a 3.5 month period doing grid bots. Altcoin to altcoin will be the key, because if we are expecting a parabolic move towards the end of this year, you want to be able to benefit from that. So all the profit that you make would be much better in something like Ethereum, BNB, whatever other ones might be attractive. What's the Qcoin one? I haven't looked at that chart in ages. I can't imagine what it looks like, but you know what I mean. So altcoin to altcoin pairs, because they will basically be sideways amongst themselves anyway, as they effectively trade down or up or wherever they go. And then, hopefully, they'll all move up, including all the bot profit that you've made, and you basically hopefully go up several 100% with just all those things that you made. So think about it like that. So the BNBs that I was making at the time were worth about $30, $35, $40, $45 a day. You know, I was getting about $100 a day at that price. Then it suddenly rallied to $100, $200. You know, my $100 a day ended up being like $200, $300, $400 a day when you retroactively price it. So that's how it turned from $1 grand to $5 to 50 grand so quickly. It was slow and steady, you know, slow and steady for a while, and then it basically went bananas. There was an element of luck in that as well, let's face it. Right, what else have we got? I would like to see you analyze fast Zeta. Okay. Where should we go? Oof. So that's terrible chart. So this is down only. This came into the market. It just died. It's made a new low. It's effectively at a new low right now. It was born in a death cross on a daily. Got rejected on the death cross. Went down to a new low. I just don't think there's anything to talk about here, really. It might rally up one day, but I would always stay away from charts that look like this. Remember, I talk about buying into strength. Buying into strength, or if anything, buy sideways. This is strength, okay, so this is fine. Zeta is not fine. It's the opposite of strength. It would appear that only strength is being considered in crypto at the moment. If you look back at all the coins that are boring and old, they should at least have a higher low. Zeta is the opposite of that. So there's no reason to look at that chart and go, yeah, I love a bit of that. It's not even going sideways. It's just going down and down and down. You can trade it through association with the rest of the market. You can't really trade it on its own, if that makes sense. So look at the total 2, look at Bitcoin, look at Ethereum. If they look like they're going to turn around and do a full reversal, then maybe you could buy some Zeta in the hope that that is. But if you're going to do that anyway, why don't you just buy into the strength? You know, it doesn't appeal to me to buy anything that's down only, unless, of course, I hold my hands up and say it's a gamble, which is fine. You have to accept that because there's no reason for a down only chart to suddenly reverse. Not really. Right, alright, we're going to do it then. So we're going to have a look at Fart Boy. Can't believe we're doing this. Fart Boy. Where can I even... So this is on a DEX then, is it? I don't know which one you want me to check. We'll do it. Where's going to be the highest volume? Oh, God. That's not... Oh, Jesus Christ. Right, okay. I can see why this might be appealing to some, but it's not appealing to me. So yeah, when you look at this, right, so you've got price, you don't even have volume, but you've got price. So you've got a reference of price here, right? I don't know what volume came into this. I don't know how much it took to create these, right? So for those who haven't heard my lecture on what creates green and red candles, it can be a bit of a red herring to look at this and go, this is a bullish chart, right? It can be, because let's just say on day one it traded with 0 volume, right? So that means if somebody literally farted out a $5 into it, it would make a green candle, because it's basically nothing more than an imbalance of the order books. Nobody's buying, nobody's selling, it's stagnant, it's 0, and then suddenly somebody buys it at market order or whatever, and it goes up. Gives the false impression that it's bullish. Now, if that happens over and over and over again, it keeps going up. And then what happens is FOMO happens and people aren't trading it. It's just people buying for more than it's worth, and it creates the green candle. That's all that a green candle does. It doesn't mean that it's amazing. It doesn't mean that at all. It's just a reference of how many people are prepared to pay more for it than it's worth, and that gives a green candle. That's why you get green candles. It's also why you get red. When everybody sells for less than it's worth, it goes down and down and down and creates a red candles. That's why crypto is so volatile. People are pressing market buy, people are pressing market sell, and they're just buying and selling based on nothing more than a hunch or an emotion. It's not being traded, I can tell you that. It's not being traded, it's just being bought blindly. So this is when you use, you know, when you need to really start trading, you've got to have a chart that's older, so it gives you the price, volume, and time aspect. And time is really important because time gives you all these other indicators that we use: moving averages, Bollinger Bands, itchy clouds. They need the aspect of time to come onto the chart, and then on top of that, this is basically an emotional chart. I wouldn't really say that this is respecting anything. Look at the wicks on it. The wicks give you even more insight into the emotional component of what makes this go green and red. You know, it also reflects, if anything, the small order books really. So what I'm trying to point out here is that technical analysis on something like Fartboy is probably not very useful. You can try and fool yourself into thinking that actually something's going on here, but really it's called Fartboy. It came into the market back in January 2025. It's gone up, it's gone down, it's gone up, it's gone down. Yeah, it's a series of higher highs and higher lows, but I wouldn't really feel comfortable saying this is going to do anything other than follow the market or maybe catch a break on somebody saying Fartboy is the next best thing. Hopefully that makes sense. You can't really. So, alright, so I think that's the wrong chart. Okay, fine. I need to know the exact ticker, because if I put Fartboy in, this is all I get, you know. How many Fartboys could there be? How many Fartboys are there? So we're talking 11 cents. So we're looking at this on a 4-hourly chart on wherever we're looking at it now. Now it's just in a downtrend with even less time involved in it. So we've really got nothing at this point to go by. And what we do have is a down-only chart. So let's not pretend that charts are magical. Charts are way better when something's older, because you have the price, volume, and time aspect. It's so important. If a chart's less than a year old, it's going to be the TA is going to be less useful than it would be if it was 2, 3, 5, or 10 years old. You know, you need that aspect. Look at what happened with XRP, right? So there was an enormous amount of price, volume, and time involved in that chart, and that setup we had on there suggested that something big was going to happen when it did, and then it did. It became a very useful chart. It's always been a good chart to trade, but it was extremely good recently when we saw that big breakout. That big breakout move was because we had price, volume, and time. So, and then it ended up with that huge breakout. It was all written on the chart basically, and we could basically, you know, use the chart properly because it had a 10-year history, more or less a 5-year accumulation, and an extremely big breakout, which is why it hasn't, or I'm assuming why it hasn't retraced like all the other altcoins. It's gone fucking crazy. So yeah, price, volume, and time is important. So something like Fartboy, nah, it's a gamble. Something like XRP, okay, less of a gamble. You've got price, volume, and time. You've got indicators. You've got accumulation. You've got a setup. You've got, when you zoom out on XRP, it is an up-only chart over a period of 10 years. It was a bit of a no-brainer. You just had you had to have the patience. Right. You know what? I think we'll leave it there. I think we'll leave it there. That'll do for this stream then. If you are interested in doing these streams more frequently, join the Patreon. It's only £7.50 a month. We do 2 of these a week. Wednesdays and Sundays is when we do them. So if you like that concept, feel free to join. Links are in the description of I'm assuming this stream or all my videos just generally. Otherwise, I hope you have a nice evening. And yeah, overall, the market is sideways, and that's better than most. We go to, well, I'll just leave it with you here so I can't answer everybody's questions. We go to the total 2. We're kind of floating around in no man's land. We're not really bullish, we're not really bearish, we're just fluctuating. We need to break above these. This isn't a bearish chart yet. We haven't made any death crosses. We're still maintaining support, mostly above the 200 simple and exponential. This should continue to break out. Should, and again the operative word being should, fulfill the criteria of this fractal into September. I'm not saying that it's going to reach like $5 trillion market cap. I'm just saying we should end up moving up and sideways into this white line where we will get rejected and come down into a bear market. So time is on our side. We've still got the majority of this year to make our way to a higher high. And that is all the altcoins, generally speaking. Maybe not all the altcoins, but my rule is to buy into strength, not weakness. Buy into strength. Sideways is okay. Up is okay. Down only is not okay. All right, stay away from the shit. All right, if you want to trade, trade. If you want to gamble, gamble. That's fine as well. But make sure that you don't conflate the two. You know, they are two completely different things. And it's pretty clear that the strong charts are the best ones. You know, Litecoin, for instance, is breaking out as we speak. Litecoin is one of the best charts out there. And it's one of the oldest and one of the most boring. And it's so shit because it's Litecoin. It's not going to attract the same sort of attention. I make videos on it. Nobody watches it. I bet if I made a video on Fartcoin, everyone would watch it because it's trending or whatever. Doesn't mean that it's the best thing out. Just because it's popular doesn't mean it's not going to work. From a trading perspective, this is a better chart than Fartcoin, right? And you might be wondering why I'm saying that, but we're talking about a trade. We're talking about a chart. We're talking about supports. We're talking about breakouts. We're not talking about speculating on Fartboy. We're talking about a boring old shit bastard coin called Litecoin, which nobody wants because it's boring. How could it possibly outperform anything? But it's positioned in a way to suggest that actually it's getting ready for a motherfucking big breakout, one that could take it to a new all-time high. It seems unreasonable because I'm talking about boring old Litecoin. Price, volume, time. We've got it. And it's working and it's trending up and it's going to blow. In my opinion, this is one of the best things that ever came onto the Patreon. Forget the fat boy. You know, forget the Trump coin. You know, I'm not talking that I'm not saying this is going to make you a millionaire. I'm talking about risk to reward. The risk to reward, the chances of making money over losing money on something like this is, you know, is very much in your favor. Buying something like Fartboy or, yeah, I'm picking on Fartboy here, but you know what I'm saying. You know, nobody wants a Litecoin because it's boring, it's old, it's done in most people's opinion. But from a trading perspective, on a chart, it's not done at all. In fact, it's just about to get going. So I'll leave it with you there. Hopefully that's made some, giving you something to think about. Stay away from the fast gains or the attempted fast gains. Move into a bit more of a level-headed trading, which is based on risk versus reward. Just because it's called Litecoin doesn't mean that it's shit. Right? It's set up to go up. That's what it is. Just like XRP was set up to go up. Bitcoin's set up to go up. They're ready. They want to do it. They're primed for it. All they need is that little bit of spark from Bitcoin and mostly Ethereum. But Litecoin, at this moment in time, could do it on its own. Right, I'll leave it with you there. Thanks for watching. Hope you have a nice evening and take it easy.